thing is that the bottom end of that consolidation is these former highs here from the great financial crisis. So really a lot of market memory. So if you were to get a breakout here in Morgan Stanley, not only do I think that that would be obviously a tremendous feat and something that I think could lead to very large gains, considering this is a 23-year base, 23 and a half year base. This thing's a beast to get going. And then if a name like Morgan Stanley, which owns E-Trade, and they have a lot of other businesses in finance, like they got a lot of things going on. So to me, I think it's very representative of financials, which one can argue is the most important, if not one of the most important sectors in the United States. So, and the world for that matter. It's really important in the United States. It's even more important in a lot of other countries. I would argue probably most other countries. Check my math, but I'm pretty sure the majority of countries have larger weightings to financials in the U.S.
Yeah. But it's still important though. And by the way, I realize that we had a bit of a hiccup on our YouTube stream, but we are live now. If you have any requests, drop them in the chat or email us, and we'll do our best to get to them in the next few minutes here. So let's move on.
What's your guess on market cap for Morgan Stanley?
Oh man, I'm going to be way off. Market cap for Morgan Stanley. I don't know. 190 million? Not billion? 90 billion? No,
100,
no,
130.
130?
Yeah.
All right.
That's respectable guess. Respectable guess.
That wasn't that off. All right, cool. What about this is for Wavy. SFM. Is this the yeah, that's what I thought. Sprouts Farmers Market. Okay. Staples.
So then what is this company? Do you know it?
Yeah, yes. It's like a small grocery store.
Where?
Phoenix,
Arizona, I'm being told here.
Heavily concentrated in California.
That sounds right.
I've never seen
SFM. Sprouts Farmers Market. It's a $4 billion grocery store in the West Coast. All right. I like West Coast grocery stores, a lot of vegetables. So what are we working with here, huh? You got big base, back to these former highs in 2013. Spencer, you know how you and I, we always talk about these new offerings, in the same way that we talk about the same day high or the same week high. Like this was that initial thrust. That was the high, right? So that's where the real history is post IPO. One can argue even the actual low from the IPO, which has kind of come into play here as well. This sort of range here, right? You see what I mean? So there's real market memory here. So, to me, I think that there's still trouble at those, post IPO highs, 47, 48. That's going to be tough to get through. So to me, the risk versus reward is not really skewed in favor of the bulls or the bears here. My suspicion is volatility is very low, without even looking at the options chain, just considering the action. So it's probably not, you're probably not getting paid too much to sell out of the money calls. They're probably still pretty cheap. And then you're probably not getting paid anything at all to sell these puts. So there's not really a strangle, it's not for me. It's messy.
All right. What about Lockheed? It's not Lockheed. L3 Harris. Sorry, LHX is the it's like Lockheed, but not LHX. This is for Daniel.
So this is LHX. So L3 Harris. This is a $32 billion.
This is the merger between L3 and shoot. Who they merged with? Oh my goodness!
Come on, Spencer.
It was the ticker was RHX, wasn't it? I think it was, but I don't know. I don't remember the company. Whatever. Okay, moving on. Anyway,
look at this beast, though. Look at this beast. So for me, I'm interested in these levels, right? Along the way, you have levels of support and resistance, right? Like this is what you've got. And then here, your levels are pretty much right around here, right? Because you've got your resistance right here in 2018, right in the, 170 area. And then that turned into support, right? And now the question is, what happens now? So the stock's down right towards 169. So this is the level right here. It's about 170-ish, right? So it's, we want to draw our lines with crayons, not with pencils, but it's around 170. Those, below that, it gets real messy down there, boy. I'll tell you that much. I'm not saying that we're going to break. This is, if it's going to find support, this is a logical place for that to happen. Otherwise, you probably got more downside. So that's what I'd be watching here. But this is a long-term uptrend. So, it's a hard bet that it's going to be a hard break, especially with as far down as it's come. I mean, this thing's been falling for, a year and a half, right?
Well,
got to hold at 170.
Yeah, it doesn't look like that bad on the monthly going back 30 years, but yeah, it is a year and a half. But most like we know that most stocks topped a year and a half ago, right? So
this one actually, this one pretty much topped when the index is topped. This was one of the last ones to really top.
Right. Okay, what about this is from Dan last week. This is from this is PBF. This is PBF Energy. What is the size of this company?
This is a refiner out of Parsippany, New Jersey, right there, Spencer's neighbor.
Not far, not too far from me, but about an hour away.
Parsippany, isn't that where Rutgers is?
No, that's Piscataway, but very close.
Oh.
A for effort on that one.
I've been to it. I've gone to a football game there. It's fun.
You ain't been to Parsippany, I'll tell you that. Nobody has.
Got it.
Except for PBF Energy, apparently.
I mean, listen, this thing's like really flirting with new highs. It's down 7% today. So it's down towards 48.50. So now you're talking, you're really looking at this area right here. It seems to be like, these former highs here from November of last year and February of this year, that 48, that's what it's flirting with right now. So what it's trying to do here is it's trying to absorb all this overhead supply. Because remember, Spencer, this is not like, we know the market is not random. Look. We know the market is not random. We know asset prices trend. We know that, it's mathematics based on supply and demand. There's more supply than demand around these prices for PBF Energy, this $6 billion refiner out of New Jersey, right? So it's still working on that. Still working on it. As are a lot of energy stocks, by the way.
Is it though? To me, it looks like it. I mean, it could be an oops, but
it could be an oops. I think it's still part of the process. It made a little false start, start.
Clearly, it's above that level. Clearly,
it's not. That's not including today's action. So we're down towards
All right.
I appreciate it though. I see you looking out.
I often get impatient.
That's right, because we look at closing prices.
No, but also just when I see a stock at resistance, I want to just go ahead and buy it because I just assume, it's up there.
You should probably do the opposite of that.
Yeah.
You don't buy stocks at resistance. Ideally, you're buying at support. You want to sell stocks at resistance,
or you buy them above the breakout when they break.
That's right. Or you buy the breakout.
Yeah.
That's right.
I'm saying I anticipate the breakout more often than I should.
This environment in general is just not conducive to breakouts in the direction of trends because we're not in a trending market environment, right? Breakouts are just that's not the type of market where that happens, right? So keep that in mind.
Yeah. Okay, to the chat we go. Long-time listener, first-time caller for Rick Worley. He's asking about CF Industries, ticker CF. They're a chemical company. They are the leading producer and distributor of nitrogen fertilizers. Okay.
Listen, the nitrogen fertilizer business must be good these days because this thing, I don't know much about that, but I'll tell you what. This when you look at it, some of the other leaders in the space, they don't quite necessarily look this good. This is a basic material company based out of Deerfield, Illinois. Spencer, shout out to Deerfield.
Yeah, I think that's a big industrial place. I feel like.
Deerfield. So I'm going to be in Chicago, by the way. If you're in the area, I will be there on October the 11th, Wednesday evening, at the Chicago Board of Trade. Come say hi.
Hey.
Email Spencer, and Spencer will give you the details. So you can come have a cocktail afterwards. We're going to be talking charts. Board of Trade is pretty cool. Spencer, have you ever been there?
I've been outside. I've never been inside.
Oh, it's even
Yeah.
cooler inside than it is outside.
Yeah.
Have you had a drink at Ceres?
What's the
The bar there.
no yeah, is that like the that upscale bar with the observatory sort of, I guess
It's
that's
the
what
opposite of upscale. It's pretty divey,
Oh, then
kind of
no.
old school. And,
No.
drinks are really cheap and they're like
Okay.
triples. Like they just give you a
No.
bucket of whiskey.
No, I've not.
You should go there.
Okay. Noted. Anyway, CF thoughts.
Yeah, I mean, listen, this former resistance turning into support here, but it's kind of in this range, right? So where are we? You got resistance up here around 108, and then you got support down here. You're kind of right in the middle. So why don't we zoom in a little closer here? Whoop. We'll zoom in a little closer. You're watching how the sausage is made here. See that?
Right.
All right.
A good old year-to-date chart, almost.
Almost. And then what are you seeing, right? This is kind of the level. You kind of, we were just talking about those false starts. Well, here's what you have there, right? You have, this is actual resistance down here, up here. And this is kind of that false start area. Right? And now what happens? That actual resistance turns into resistance again. So CF down towards 82.5, right? It's, maybe trying to kind of turn that former resistance into support, maybe. But the truth is we're just stuck below that for now. Right? So bigger picture, I think it's got potential to maybe get back towards those former highs, but shorter term, it's got work to do. And if you start to lose 82 to the downside, you can head back down to the 70s, right? No question, right? Down towards, really, these levels down here, right?
All right.
You retest these lows. So that's how I look at it. So from a longer term perspective, I think it's got potential. Shorter term, it's got plenty of work to do.
What about Eli Lilly? This is a very interesting chart. 3 weeks ago, the stock was $600. Now today it's 520. To me, like 500 is like the obvious line in the sand, right? Or yeah, 502, but whatever, call it 5. Because that was the gap up, right? I think that's probably on some drug news. I don't know. But anyway, what say you?
I mean, this is the long-term chart.
Yeah, this is a monthly. I was on the daily.
And just ran into the key extension level right there, right? From the highs all the way down to the lows. And, the market's respected these levels along the way. This time is no different, right? Notice how these levels continue to turn into support and resistance. Saw it again here in 2022. You got the breakout, and where did you run into resistance? Right where you should have, right? So as long as we're below that, I think it's messy here for Eli Lilly. So Eli Lilly, just to refresh everyone's memory, has been one of the biggest winners on the planet. This one in Novo Nordisk, I think it's because of their obesity drugs. I think it's just a similar story. They both look exactly the same. So look at NOV and then look at LOY. They look the same. And here we are just running into that resistance. So, down another 3% today, down towards 520. I think, get used to that. I think it's going to be messy for the foreseeable future. But if history has proven anything, maybe it only lasts for months and not years. Maybe it's only a few months, but I think it's, for the rest of the year, I'd stay away from this one. It's going to be choppy. Maybe sell some volatility. Actually, it might not be a terrible candidate if you're getting paid to sell maybe the 600s or something, or 590s if they exist, something like that. Maybe, but that's off. Yeah, maybe.
Question: Why draw the Fibonacci extension from those highs, whatever year that was? 2000. I don't know.
Yeah, you want to take the size of the correction. So here, Eli Lilly peaked in 2000, right? Okay. As did a lot of things. This peaked a little bit later. but peaked in the peaked then, and then ultimately broke out in 2018. So it took almost 20 years to complete this base for Eli Lilly. So all of the great things that Eli Lilly did during this period, right, was already being priced in as prices absolutely exploded in the 90s, right? All this future great things. And then the market has to digest all of that, and then maybe they had their struggles, who knows? But for whatever reason, it took 2 decades to complete this base. And you know how we always say, the bigger the base, the higher in space. Well, you know why we say that? Because here's Exhibit A, example number 597 of these huge bases being completed. And look at the explosion out of that base. That's just how markets behave, right? So along the way, we don't have former levels of resistance like we did up here to say, oh, there's still supply here, like in something like CF Industries or LHX or whatever, right? So we use these Fibonacci extension because the market, there's symmetry in how the markets trend. We know this. We've observed it for hundreds of years at this point, and this is just another great example. You think it's a coincidence that the market just corrects at all of these levels? Like, we're not making it up, like you can really see supply and demand really coming in at these levels. So this is no different. And, maybe it takes a few quarters, could take a year. I don't know. This could be the all-time top, and then we completely crash from here. I have no idea. But I don't want to be long if we're below, 590 or so. We really got to start taking that out for me to get interested in this from the long side. Otherwise, if you're getting paid for it, I'd be selling out of the money calls. I like that.
How come you don't put much stock into like gaps on the daily chart?
Because they are way less important. Right? Depends on the time. I like to look out, zoom out to just get perspective. And in many cases, that's enough, because now look. So now we can go to a closer look at Eli Lilly and be like, oh, this ain't so bad. Right? You're looking at LOY. Yep. And then you say, let's take a look at make it a daily chart. And now we know that there's trouble up here. We know from this chart here that there's trouble here in the mid 580s. Right?
But what I'm getting at is, couldn't you also say there was support at like 502 or wherever that low is from the top of that gap, right?
I think there could be potential support from this gap fill for sure, right? Because this is the resistance here.
Not at the bottom of that gap, or I'm sorry, the top of that gap. Yeah, not there.
Yeah, maybe. Yeah. I mean, listen, all of these levels that you're pointing out, that I'm pointing out, are potential levels of support. These are potential levels of resistance, right? Like, that's all that it is. So we don't want to, yeah, Spencer's right. So am I. These are all, again, potential. Okay. Now, is it more likely that this one holds, or is it going to be this one? Every time is different. But at the end of the day, that's less important to me than knowing that we are stuck below overhead supply in Eli Lilly. Okay. And making a bet from the long side is a tough bet. The odds are just not in your favor that you're going to be. So you want to be selling premium. So you want to take the cash. So this is the sucker's bet. The sucker is buying this right now, and the sucker's willing to pay. And if volatility is high because of this correction, higher, and my suspicion is it is, I'm actually going to bring it up in the meeting tomorrow. We can sell out of the money calls and collect that income.
Yep, and get paid.
You might even be able to sell the puts. Also, I don't know. Maybe you sell the 560 puts. Maybe 560. Excuse me, the 460 puts. Maybe if you're getting paid for it. But I'm good by just selling the calls. Easier. I don't need two legs on this.
Yeah. Do you want to own the stock? You don't sound like you do. I'm not sure why.
No, I don't want to own the stock. Yeah. I want to sell the calls.
Yeah. Or you should sell the puts too.
Because knowing Sean, he's going to be like, let's sell the puts also. And I'm going to say, no. I feel like that's the conversation we're going to have.
Okay. All right. Yeah. We'll see.
I've done this with him a few times, and I know how he thinks and how I think. For me, I'm good. Just sell the calls. That's it. Easy peasy. He's going to be like, well, we could also sell the puts.
Okay. Let's do one more. Let's look at Home Depot for wavy. He wants to short it. I think a lot of charts look like this, honestly, to me.
Well, this is a long-term uptrend, as we're well aware here,
Yeah.
right? On the old HD. And then zooming in shorter term, I think a weekly chart probably does the best job of showing this, right? We're kind of in this range, right? Long-term uptrend, no doubt. And now we're in this range. So for me, it's less about shorting the stock itself and maybe shorting the volatility. So Home Depot is a pretty freaking humongous company, man. I think it gets understated.
It's massive.
300 billion.
I would I was going to say like 250, but yeah, it's huge.
This thing is a monster. So here we are right around 290. We're literally right in the middle of this range. So again, it comes down to maybe selling the 270s and selling the 340s if you can get paid for that. Like if there's enough juice there. I don't know that there is. Like we're right in the middle of this range. You might even be able to sell the calls already and then maybe wait on the puts and sell them when they get a little more expensive, maybe. Again, but this is one of those, if you're going to make a bet on something like this, maybe you're betting, maybe he's betting on this breakdown to get back down to those lows. Maybe, it's come down a long way. I don't really get that cute. For me, if I'm going to do anything here, I'm selling the wings, selling out of the money calls, selling out of the money puts, collecting that income. If I'm going to do anything, that's what I'm going to do. And by the way, the fact that I keep saying that for different ticker symbols, I think is evidence of the type of market environment we're in, right?
Yeah.
This is the range-bound market, so it's not surprising that Home Depot's in that range. Eli Lilly's in that range.
That's why I said every chart looks like this, because they all do. To me, a lot of them do, at least. Maybe not all of them. But
these are good examples of that, right? They're just, it's a market of stocks. These stocks are showing you what kind of market we're in.
That's right. All right, that'll be a good place for us to wrap. If you want more of this, you'll get more. Some of you will, at least, if you are member of All Star Charts Premium. Conference call is tonight. If you have questions on how to get access to that, you can always email us at the email that is on the screen. The show is back on Thursday with Straza and Patrick, so stay tuned for that. If you would be so kind as to hit that like button, hit that thumbs up, we would also appreciate that as well on YouTube. And that's it. Have a good one, and we'll see you guys later.
Adios.